Hi, this is Kerry Artak with Wicked Stocks, bringing you your daily Tesla report for Wednesday, October 30th, 2024. But before we check out the charts, I just want to ask you to please click like, share, subscribe, and check out wickedstocks.com, where we offer a full suite of both daily and weekly analytical videos, just like the daily Tesla and daily NVIDIA reports, daily analysis in the SPY, daily analysis in the Triple Q, weekly analysis in the S&P 500 index, the NASDAQ 100 index, and Apple stock, as well as 2 individual stock picks a week that you never see on YouTube that cater to the 3 to 5 week swing trader out to the 3 to 5 month near-term investor, always looking for 20% moves or more on those underlying stocks. And you get to see all of this for free. We offer a 5-day free trial up front. So check out wickedstocks.com. Let's take a look at the charts. I'll start with the daily chart here and show the fact that we came close on Monday. I got to figure out what day of the week we're in, to testing the 276.69 channel top, which had been an objective following, well, several developments. I'm not going to backtrack too far here. 276.69 is on the weekly chart, 275.81. Did we test it outright? No, but we came close enough where actually on Monday, when we did come close to testing it, we fell back to close negative on the day. And that was a new high, actually, following really the April low. We took out the July high by just a bit. And so that phenomenon, when you push to a new high and then reverse and close negative on the day, is in itself a sign of weakness. And combined with the fact that we came very close to testing the mid-270s resistance, it was considered a sign of weakness. And now what we have is 262.45. This simple trend line off the highs. I like it. In part because it's consistent also with the low of the high that was put out on Monday. I think the Monday's low was 262.24. I'm going by memory there, but I know that it's lower than 62.45. And so 62.45 is our daily resistance. It can contain daily buying pressures. And in fact, below which I do think by the end of next week, with present volatility, we can fall back to this new 3/8 downside Fibonacci. It's a 3/8 Fibonacci from the Monday high against the August low, and that can contain weekly selling pressures. And we do have on the way down, as we did yesterday, 254.45. We didn't test that either. We came about a point off of it. It is a 5/8 downside Fibonacci from that gap low that occurred last Thursday against Monday's high. And if we test 245.45, it may well contain intraday selling pressures. Holding above 254.45 will keep 262.45 in reach today, and breaking below 254.45. I don't see 238.57 today, but we do have some minor points mapped out for you for those of you who are aggressive day traders. I can't really say exactly what the objective might be. We do have a slight contraction in volatility, so I do not see 238.57 today. But I will say we are expecting 238.57 by the end of next week or sooner, say over the next 3 to 5 days. And if we settle today below 254.45, we probably will see 238.57 by Friday's close, where we could actually bottom out through next week. And from there, round back up to 276.69, this channel top, within 2 to 3 weeks. In terms of the 2 to 3 week swing trade, 2 to 3 week swing trade, selling 276.69, buying 238.57, buying 238.57, holding out to sell for 276.69. And inside that, we have a session containment pivot point. We are below that now, so we are expecting 238.57 now before we expect 276.69. However, if we were to, push or open today above 262.45, the high settlement price that was put out last Friday at 269.19 is in reach today. And if we close today back above 262.45 by Friday's close over the next day or two, we should see the 276.69 formation, where we can top out through November and from there fall back to some variation of channel support that is presently at 214.28. This is really the beginning of a range. I can tell you that right now. The 210s loaded with significant support that can, and once again, I'm going to show this, that if we test 276.69, I do think we can fall back by the end of November to really what is this trend line. But right now, because we haven't actually tested 276.69, we have to create a channel from the highs that actually do exist, and that takes us to 214.28. Is this an objective now? I think you can, if you haven't already, I wouldn't play it just yet. But if you did play it, on Monday when we pushed close to 276.69, you can hold that short for the 210s. I do clearly expect it if over the next week or so we settle below 238.57. Then it's just another 1 to 2 week target where we could actually bottom out through December and the balance of the year. So that is kind of like, I'll map it out again. The 2 to 3 week two-sided swing trade is buying 238.57 and selling 276.69. But with respect to 276.69, you can also sell that, say, more than 2 to 3 weeks, more like 3 to 5 weeks, because holding below it or once tested, we can fall into the 210s within 3 to 5 weeks of testing the mid 270s. Let's talk upside. That if we were to close, I don't see this today, and I don't think you do either, but at the end of the week, if we were to close above this channel at 276.69, we enter a meaningful buy signal. So rather than selling the market in the mid 270s, as is recommended and has been recommended now for the last couple of weeks, you are buying a settlement above 276.69. That would then anticipate 315.57 within probably 3 to 5 weeks. The weekly chart actually shows it quite well because the daily channel top at 315.57 on the daily chart, you can see from the April low. If you go to the weekly chart, you can see the same structure at 316.11. So closing above this mid 270s resistance at the end of the week does shift our focus back into the bullish column clearly as we move through the month of November and really through the rest of the year, because 316.11 would be expected. I think that's a 3 to 5 week move, but by the end of the year, and by the way, by the end of the year, this 316.11 converges with 335.74 anyway. By the end of the year, following a settlement above the mid 270s, I would expect this 335.74 1.5, almost 2-year channel top. In January it will be, where we could top out through the first quarter of next year. So the mid 270s, a big pivotal area for those of you who like to trade the 3 to 5 week out to the 1 to 2 month time frame. You are long the market above 276.69, which is the same formation we find on the weekly chart at 275.81. But until then, being short the market is recommended. If you weren't able to do so on Monday with this near miss, then you may have already again on Tuesday with the settlement below 262.45, because I do see this 238.57 now as a kind of a 2 to 3 week target following the near miss Monday of 276.69. And now that we've closed below 262.45, I see it, more as by the end of next week, over the next, week and a half, 238.57 in reach, where we can bottom out on a weekly basis. I could go into the 2 to 3 week time frame again, but I would be repeating myself probably for the 4th time. So I'm going to leave it at that. Please click like, share, subscribe, check out wickedstocks.com. Take advantage of our 5-day free trial. We get 2 stock picks a week, daily Triple Q, daily SPY analysis, weekly Apple stock analysis, etc., all for 5 days for free. I'm going to leave it at that for Wednesday's Tesla report. I'll be back tomorrow, of course, with Thursdays. You have a great evening.